Hi, this is Joseph. This is a performance update for the Forex Automated Trade Signal service. It is Wednesday, it's August 4th, and we're looking at the pound dollar. So this is the point and figure chart that I used. And the way I've constructed this particular chart is to mimic a time frame that would resemble approximately a 30-minute to a 1-hour chart for day trading purposes. Every time I execute a trade with the trade copier, it's going to be, for the most part, a day trade. It's not going to be anything that we're going to hold on to for days, weeks, or something like that. Occasionally we get stuck in a trade and it may take, a few more hours than I anticipated, but that's just the way the markets work at times. Usually, as I've mentioned many times, when you see these trades, I don't get into the trade unless there's a point and figure entry, and then I can calculate where the take profit level is, and I'm going to talk about that here in just a moment because there's two particular reasons why I do that. But you'll also notice that I don't get a signal until there's some kind of significant change in volatility, which then generates some kind of a signal, and from that point on, the market is active. The market is more involved. There's more volume. There's more participation, and I generally see my trades move into profitability for the most part throughout the entire time that we're into the trade. And they move relatively quick. I mean, each one's going to be a little bit different, but for the most part, this is pretty typical. Occasionally, there's going to be some kind of a retracement and a retest, sometimes a level like the level support level that you see here. And there, you'll notice that there's actually two support levels here. And this was the first one that I was watching this morning. And there was a breakdown here. You can see it's a triple top or triple, it's kind of breaking down to the bottom side, triple bottom here. And then it gives me the entry, and then there's going to be some kind of retest. And I'm always anticipating the retests. They don't always happen. This could have, exploded to the downside as a result of economic data, the reaction to it, which could then trigger a signal. But for the most part, there's going to be some kind of a retracement. This is exactly what we saw. It retested the level that it broke out of, let's say, right with this little support area, and then it comes back down, and then it gives me a second entry. Now, this is a little bit different, a entry down here at the bottom with that entry at 1.3940. It's a little bit different than what you see here. But at that point, when I determine my entry, I'm then going to calculate the number of columns that I see that led into this trading opportunity. And based, again, on how I constructed this chart, I multiply these figures, and that's what gives me my count, my target. So each time I take one of these trades, there's going to be a minimum count, a conservative count. That's the first target. And then if price continues, and I talked about this yesterday with the dollar yen, and if price continues lower, it's going to give me a second count. Now, I'm always going to lock in profits. I'm not going to give back profits and then just target the second target if it develops and then ignore the first target. If it starts to reverse and it doesn't even hit the second target, which sometimes it'll do that, I'll have a second target. Sometimes it'll exceed the first target, and it'll travel somewhere in between the two targets, and it'll bounce and turn around and go back up. I'm not going to give back those profits. If it does something like that and it doesn't hit the second target, then I'm obviously going to take all of my profits and close out the trade at the first target, because it just doesn't seem to be, there just isn't enough momentum to really drive it to that expected second target. But again, the first target is always going to be a conservative target, and that's the one that I'm going to be focusing in on first. Again, I'm not going to give back any profits. I'm always going to lock in profits at that first target. So I mentioned that there's a couple of reasons why I'm doing this. Again, it's going to give me a precise entry. I don't get into the trade until I see an entry on the point and figure. If you look at a candlestick chart, for example, and this is something that a mistake that I used to make a lot when I first started trading, I would watch candlesticks. And very often it would take out a low, price would take out a low or a high, but the candle wouldn't close. And then it eventually, later on, if I fell into that head fake move, it would go back up into that range of consolidation. I get stopped out, or it would go the opposite direction. This prevents this. Prevents that from happening. Point and figure prevents that from happening, because I'm not going to be tempted to go long or short until there's some kind of a significant change. The other thing that I'm doing at the same time that I'm watching the setup here on the point and figure is I'm also watching my bar charts with volume, because as price starts to move up into this area of resistance, I can see the divergence between price, the range of these bars, and the volume, and that also helps me determine that I'm actually looking at some kind of a reversal. At that point, then I switch over here, or I have this side by side, the point and figure, and then it gives me my entry. Again, the entry isn't going to develop on the point and figure until there's a significant range, or I'm sorry, a significant change in volatility. There's got to be more volume and more participation. So from that point on, I get into my trade at 1.3940. My target was 1.3907. Very often it'll go a little bit lower than that in a situation like this. That's okay. I can scalp, or I shouldn't use the word scalp, but I should say what I mean is that I can take a little bit more off of the trade than just this 1.3907 target. Now, if you use a system like this and you have to walk away from your charts, then obviously I would recommend setting your take profit level at the specific or specified target. You don't want to just put it below maybe 4, 5, 6, 7 points below that, because you don't know if it's actually going to go 1 or 2 or 3 pips below that. This is definitely the target, and it's always going to hit that target if you calculate this correctly. So if you walk away, you've got to use the target and honor the first target. But if you're hands-on, if you're actively trading and you see it run into that first target, you've got an alert. You can get maybe 4, 5, 6, 7 pips a little bit lower. And then, of course, as I always say, if there's another count, if there's enough data that I can calculate a further target lower and this trend continues, I could hold on to that trade a little bit longer and get more out of the trade. And who knows at that point? It could be another 20, another 40, another 50 pips. But it really depends on the amount of data and how accurate I am in being able to identify the new sideways range of redistribution on the way down to then calculate a further target to the downside. Otherwise, again, it's just going to be one target. So this was a great target, this trade. The target, again, was 0.7. The entry was 40. This paid approximately 33, 34 pips, not including the spread, of course. So this was a good trade. There's nothing wrong with this trade. Worked out perfectly. Again, we can scalp a little bit more off of it if we're actively trading it. I use the word scalp, but that's not what I mean. I just mean that you can pick up a few extra pips if it goes through that target and you're actively sitting there at your desk and you can pay attention to what's going on here. You don't want to let it bounce and then give it all back. Something to that effect. So never disregard the information and the original first conservative target in a situation like this. So this is how I trade with the trade copier. All of my trade copier subscribers got a trade like this. Again, 33 pips, standard lot. That's $330 today, just one standard lot. I always recommend trading or getting to the point where you can trade at least a standard lot. I do have a few subscribers that are trading half standard lots. So instead of earning $300, they're earning about $150 on a trade like this. But this is a relatively decent trade on a relatively quiet day. There really isn't a big explosive move. Very often, or often a few times a month, I'm going to get a trade on the pound dollar on a setup like this that would mimic the 30-minute or the 1-hour time frame, and it'll reach 120, maybe even 210 pips. I've had those in the past, more or less recently, but they don't happen every single day. This is what you could expect as far as a relatively slow day, a trade similar to this. The euro dollar did pretty much the same thing, and the dollar yen did pretty much the opposite, or the same thing in the opposite direction, which was also a good opportunity, which helped us close out our trade from yesterday. I made a video on that. It's on the YouTube channel. You can see that. So again, this is exactly how I'm using point and figure. I get this question all the time. Point and figure is relatively new to a lot of my subscribers, so they really want to know what it is that I'm doing and if it really works. Yes, it works. I've mentioned that some of the greatest, I probably shouldn't say it like this because it probably doesn't really matter, but I've said many times that some of the greatest traders in history use point and figure. It is a well-kept, closely guarded secret for a lot of traders. And the other issue is that, when you look at a chart like this, most people, when they get into the business, they're looking at candlestick patterns. And when they see something, a chart that looks like this, they just get confused and it's just not the same thing and they don't want to take the time to learn and study it. But if you understand the mechanics as to why these X's and zeros develop on this chart, on the point and figure, you're going to get a clear insight to the price action, the supply and demand, that constant struggle, and the weakness, the divergence, all of it. You can see it in real time, and it always works out like this. I mean, every single time I get into the trades, I'm not worried about them. I know where they're going. I know where my stop is. So the second reason that I mentioned I was going to cover is that it's also going to help me identify whether or not this is a 1-to-1 or a 2-for-1 reward to risk ratio, that kind of thing. Some people look for 3-for-1. Whatever it is that you're looking for, whatever it is that your trade plan, if you always insist on a 3-for-1 or a 2-for-1 minimum and you don't want to touch any 1-for-1s, well, you're always going to be able to calculate that when you can determine on a point and figure where your entry, your target, and where your stop is. So that also makes it a lot easier to select the less risky trades and the trades that are more likely to pay you more across the board, depending on what your ultimate goal is and your trade plan is. But 1-for-1, occasionally they're okay. I mean, I'll take them if they're clean and they're very, very good trades. Sometimes that's just how they work. But usually and very often they're going to be 2-for-1 minimum and very often 3-for-1.